Yo, what's up? This is another video for the series Power of 5 stocks. These are the top stocks I'm trading on Friday. I will be live streaming at 6:30 in the morning on YouTube and Twitch, GMR Trades. So go check me out if you're up at 6:30. All right, let's get it right into the charts. TSM, as you can see, we have a 1 hour high and low. We have a 1 hour low, right? A down candle and an up candle is a low. You take the lowest of those 2 wicks, which I did here, and you just draw a line, and then you go down into the 5 minute chart. Now, once this 5 minute candle breaks past this line, it is now bearish. So we wait for our entry, which is called an order block, when it hits this line. So once this breaks and it retouches this line, we will be entering short. And as you can see, we'll have our stop above the recent highs, and then we'll go on the 1 hour chart again to see our take profit. And then right here, this massive gap is our take profit, and that's TSM. But it has to do all those things. If it doesn't break structure, go to the downside, we are not trading. All right, Walmart is up next. As you can see, we have a down candle, up candle, same thing as the other one. That's a low. Going to the 5 minute chart, it already broke structure on the 5 minute chart. Now, if it starts heading down, because it's out of fair value gap. So honestly, I think you just take the risk and just go into the trade. You just say, you know what? I'm going short. Boom. Instantly go short. 6:30 a.m. go short. Okay, now we are on Google. So as you can see, this has swept recent liquidity and now it's printing bearish. So when this breaks this low on the 5 minute chart, we will be entering once it reaches our order block. And our take profit would be right here at this gap. Now, this is a bad risk to reward, but you can take it at your own risk. This stock is at all-time highs. With me knowing that and the 1 hour is bearish or will be bearish, yeah, I would just take profit at the gap because that's a massive fair value gap. So take profit at the gap. Now we are on Oracle. As you can see, we swept recent liquidity and now we're bearish. So you got a down candle, up candle, that's a low. You just mark out the lowest of those two. Now it already broke structure to the downside and it already hit the line. So same thing with Walmart. You just say, you know what? You only live once and you just short this shit right at market open. If you don't feel comfortable doing that, just let it run up to this liquidity and then go down. And then our take profit would be, so take profit would be here and here. These liquidity sweeps or these liquidity spots. Okay, let's go to P Diddy. As you can see, this was on a bearish downtrend and then it broke structure to the upside. So making this is a low, a higher high, higher low. So with this one, you can see a up candle, down candle. And if it breaks above this, then you would go short on the 5 minute chart. Remember, we're trading at market open. You would put your stop underneath the recent lows, have your take profit there, or at this gap, whichever you decide. This liquidity or the gap. Now, if it goes the other way, if the 5 minute structure breaks this low, you would go short. So if it does do that, if it breaks above the lows, you would have your stop loss above the highs. And then your take profit would be either, let's see what's valid liquidity. 5 minute, 15 minute. I don't see this going to the downside. That's the only thing. I would go here to this liquidity. But I don't see it going to the upside, so I would just take the longs, not risk the shorts. And yeah. But my top plays are TSM, Walmart, and honestly P. Diddy. And then Oracle and Google, those are if they work, they work, you know? But yeah, I'm out, man. Have a good one.